This is Kunal Shah from ICICI Securities. We have with us today Mr. Sanjay Malhotra, Chairman and Managing Director, Mr. Ajay Chaudhary, Director of Finance, and the senior management team of REC to discuss their Q3 and 9 months FY21 earnings and update on the recent developments in the power sector in general and for REC in particular. Over to you, sir.
Yeah, so thank you, Kunal, and thank you everyone for joining in this conference call. We had our board meeting on the 4th of February, and we have published our results for Q3, and I'm happy to report that we have got excellent results, excellent performance, record performance. All of you would have seen that sanctions, insofar as sanctions are concerned, in the 9-month period, we have had a record sanctions of 137,000 crore, disbursements 62,000 crores, that is again a record, interest income of 25,800 crore, total income 26,000 and about 300 crore, and the profit before tax of 8,060 crore and profit after tax of 6,292 crore, which is a record for the 9-month period. Similarly, for the 3-month period also it is a record. In terms of growth, sanctions grew in the 9-month period by about 43%. Disbursements, again a healthy 17%. And interest income by about 18%. Profit before tax in this 9-month period has grown 28%. Q on Q, vis-a-vis last year, it grew by about 20%, and even sequentially it has grown 1%. If you talk about profit after tax, it grew 41% in the 9-month period. Sequentially, it grew 3%, and Q on Q, 38%. Loan book has also grown by about 16% in the last 1 year. And in terms of the key financial indicators, happy to report that net worth has increased. I think this is perhaps, again, a record growth in net worth in the 9-month period from end of the beginning of this fiscal to the end of Q3. And it has grown by about 6,000 crore, which is 19% growth. The CRAR, this has improved. This has improved from 16% to 19.27%, 16% as on 31st March 2020 to 19.27%, and correspondingly the debt equity ratio has also improved from about 7.94 on 31st March 2020 to 7.31 as on 31st December 2020. The margins and the interest spread remain quite decent. The yield for the 9-month period was 10.71%. Cost of funds has decreased by about 15 basis points to 7.29%, and the spread is 3.42%. Net interest margin is 3.98%, an increase of about 20 basis points. And return on net worth is exceptionally high at 21.84%, almost 22%, which is quite high. And in fact, it used to be in this range about 4 or 5 years ago. Asset quality has improved over the last 9 months. Asset quality has significantly improved. The gross NPA has reduced from 6.59% to 5.1%, and the net NPA has also decreased from 3.32% to 1.95%. So that is again a matter of satisfaction. In fact, one major part of the reason is the resolution of one major asset, bad debt, RKM in the Q2, So that has contributed. And the provisioning is for the stage 3 loans. Stage 3 loans provisioning is about 62%. So asset quality is very, very high. In terms of the loan portfolio, we are well diversified in our loans. Mostly, of course, it is in the government sector, as you are all aware. Almost 90% is in government sector, and about 11%, just less than 11%, is to the private sector. In terms of capex and non-capex loans, about 79% is in capex, again, which signals a healthy trend. Non-capex loans, 21%. It has increased. It would have increased marginally in the 9-month period because of COVID-related liquidity infusion scheme. We are well diversified amongst various borrowers, as mentioned. Top 10 borrowers account for about 44%, about 40%, top 10 borrowers. And they are well, we have got good securities. So going forward, we don't expect bad debts and NPAs, as about 28% of our government portfolio is guaranteed. So overall, it's been a very, very satisfying Q3 for us. Going forward, again, we are very hopeful that we will be able to maintain good results. You are aware that in the budget, it's a growth-oriented budget, first of all, and secondly, even for the power sector, we have got two major announcements. One of them related to a new scheme for the distribution sector, which remains, as people say, the Achilles heel of the power sector. So there is a new scheme, a revamped distribution scheme, which should be notified and implemented, launched in the coming years. So that should help in our business and help in the sustainability of the power sector. Along with that, there is a major reform which was announced by the Honorable Finance Minister, and that is regarding introducing competition in the distribution sector. So we are very hopeful that as a result of these, REC will continue to improve its business sustainably in the next quarter and in the next financial year as well. Thank you. If there are any questions, comments, I suppose we can now take them over.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kishan Gupta from CD Research. Please go ahead.
Yeah, hi, good morning.
Morning.
Yeah. So basically, we want to understand one about your cost of funds. What is the trajectory?
Cost of funds trajectory in the sense, it has been in the range of about between 7 and 8%. It has been going down. I can share the figures over the years. If you give me a moment, we have those figures. But going forward, I think more relevant to ask is going forward. Going forward, I think we expect it to go down further. We have been, raising funds at very, very competitive rates, and going forward, we should be able to raise funds. You are aware that we raised funds, for periods 1 year to 10 years, mostly 5 and 10 years. So we should be able to raise. We have been able to raise 10-year funds in the term by way of bonds and loans at about 7% and about 6% for 5 years. Thank you.
So essentially, if I see your cost of funds, it has declined by 15 bps in 9 months.
Yeah, that's right.
So has there been any major shift in your cost of funds because of this COVID-related general fall in interest rates?
Yeah, so as you are right, as you are yourself saying, the fall is about 15 basis points. So this is overall fall of 15 basis points is the average fall on the whole of the borrowing. And the borrowing this year have been about 70,000-80,000 crore, which is only about 20%, let's say about 20% of our total portfolio. So if you look at the cost of borrowing this year, vis-a-vis the cost of borrowing in the previous years, it has fallen by about 70-80 basis points. And that's why on an average it has fallen by about 15 basis points.
And what is your loan book growth target for the year? I mean next year, 22?
We hope to grow by about 10 to 12% per annum.
Okay. And what's the dividend expected this? Because you have given the first interim dividend, so what would be a dividend?
That is for the board to decide. I don't think I will be able to answer this question right now, but one can expect, in the same range as one has been seeing over the last few years. I don't think it should be lower than that. More than that, I think we'll have to wait for our next board meetings. It is not something that is in my hands alone to decide.
No, it is okay, but the point is, will there be a policy to give out all the dividends as interim dividends, or how it will go about? Because last 2 years has been all interim.
There will be some interim dividend. There should be some interim dividend. But whether it is going to be all of it, I will not be able to say. But yes, there will be an interim dividend. Most of the dividend should be in the form of an interim dividend. But finally, what interim dividend and final dividend is announced, it's a little premature to say.
Okay. Thanks a lot.
Welcome.
Thank you. The next question is on the line of Subrat Dwivedi from SBI Life. Please go ahead.
Hi, sir. Thanks for taking the question. Wanted a bit more color on asset quality. So are these numbers the pro forma numbers excluding Supreme Court decision, or these are just the reported numbers? GNPA.
Yeah, so you see, we are having 26 loans, 26 projects, which are under various categories of stress, totaling about 18,220 crore. So out of these, category A projects where resolution plan has been already approved and implemented, there are 7,300 crore. Those which have been where the plan has been approved and is under implementation, that is about 2,178 crore. Projects under resolution but outside IBC, they are 4,400 crore. And those under the NCLT IBC process, still under resolution are 11,588 crore. So this makes 18,220 crore.
Okay.
Yeah. So these are the details.
Okay.
This is the full, 26 total number of projects are only 26, out of which 7 have been resolved, 7,311 crore, and remaining roughly about 11,000 crore are NPA projects, comprising 19 projects.
Okay.
Yeah.
So last time I think some, even in the government sector, some projects had moved above zero DPD, perhaps in stage 2, and the expectation was they'll again move back to standard, zero DPD status. So any updates on that?
I don't think there is any project in the state sector.
There is no project in the state sector. There is only one project which moved from stage 3 to stage 2 in Q2, that was TRN Energy, and we hope that it will move to stage 1 very soon.
But in the government sector, coming to your question, in the government sector, there is no major or even minor, to my knowledge, which is in, the NPA category.
So not in NPA, but are there like delays earlier, because it used to be zero DPD always, not a single day of delay also.
No,
but
there are delays. Let me clarify. There are delays, but the delays are up to 90 days. Beyond 90 days, there are no delays. There are delays, but that is also again, very small quantum. That's a very, very small quantum. I'll see if my team has those numbers. I can perhaps share those numbers with you, but that quantum is not very substantial. It is not very substantial.
Okay, sir. So that number will help. I have more questions, but I can come back in the queue. Thank you.
So, their question is as to Mr. Vaishnav will have that figure as to those which are overdue as on date. We can only give them, those which are overdue as on date.
Yeah.
This is that number. This is what he wants to know. As to we'll share the information with you separately. We'll share that information with you.
Okay, sir. Thank you.
Yeah, but it is not very high.
Okay.
Yeah.
Thank you. The next question is from the line of Bunty Chawla from IDBI Capital. Please go ahead.
Thank you, sir. Thank you for giving me the opportunity. To a previous question, the previous was asking about this. This number includes the Supreme Court dispensation as well, or is it the Supreme Court dispensation has not been taken care in this stage 3 assets? Because Q2 to Q3, the number has been still at 18,220 crores. So it shows that there has been not a single slippages during this quarter. So if you can clarify that.
In our case, we have not taken any dispensation with regard to the Supreme Court decision. All our standard assets are standard by virtue of their period of overdue.
Yeah. So it is as per the RBI provision, which is the 90-day period. It becomes substandard, and it is exactly as per that. We had in our reporting even earlier not taken any relaxation, and we continued to follow the RBI provisions with regard to provisioning and with regard to asset quality.
Okay, that was very helpful, sir.
Yeah.
And sir, similarly, any OTR, any applications we have received, because it was deadline up to 31st December, any restructuring we have done, sir? Or is it expected to do in Q4 on that part?
There is one restructuring proposal which is pending, which is regarding TRN, which was received some time ago. That TRN is a 600 megawatt project. So that restructuring without any loss, without any financial loss, only a restructuring in payment of for about 2 years is pending, and that should happen in Q4. Other than that, there is no restructuring proposal that we are actively considering. There are certain proposals which keep coming, but we don't think there are any suitable candidates for restructuring. Does that clarify?
Hello, Kunal?
Sorry to interrupt. The line for the current participant has dropped off. We'll move on to the next question. That is on the line of Qtr3 from B&K Securities. Please go ahead.
Yeah, hi sir. Good afternoon. My question was, sir, firstly on growth that you already answered that for this year at least we had mandated disbursements and hence there was some growth. But going ahead, are we keeping our guidance that it will be about 12-13% growth every year?
So, see, this year was obviously an exceptional year, as you are aware. But over the past 7 years, we have been growing at the rate of about 14% per annum compounded. So, going forward, certainly 14% per annum may not be achievable. Next year, we hope that we will, the capex cycle post-COVID will kick in. And it will be, maybe the next year it will be difficult, to have a growth, because this year has been an exceptionally, an unexceptional, year in which the growth has been about 16%. So, but I said, that in the coming years, we should expect, 10 to 12% growth. Next year, it will be difficult. Let me be very candid. I don't expect there to be a growth. If we are able to maintain these figures next year, that in itself should be an achievement. See, overall, broadly, I am saying, let us look at it, at a longer. This is an infrastructure sector we are working in, and long-term outlook, I think, is very, very positive. It's positive because we are still, average per capita income, consumption of electricity is 1/3. 1,200 units per year, roughly, is 1/3. And the new scheme is going to come in next year. So there are going to be sanctions next year. Maybe there may be some disbursements, not major, because the scheme will just come. So next year there will be some disbursements on account of the new scheme, but most of it will, my sense is that most of it will come in the next to next year. Some of it can come in the next year. And then we are moving, to related sectors. We are moving to related sectors like EVs, electrical vehicles, forward and backward linkages with, say, lift irrigation projects. And then there is a lot of energy transition, as you people are already aware. Thermal being replaced by renewable energy projects, and a lot of the thermal projects are also going in for pollution control equipment. We have not been able to get much business, but we are looking at our policy and especially our interest rates as to how, and we hope that we will get some business from even the pollution control equipment being installed in thermal power plants, which again went slow because of COVID. And renewable energy, already we have a presence, and I think there should be substantial offtake now with prices, going down below 2. In the long term, of course, these prices lower prices will drive energy transition, and so there is good opportunity for us in the next 3 to 5 years to easily record, 10 to 12% per annum growth rate. Thank you.
Sir, and my second question was that now that the much-needed disbursements have happened in Gen transmission companies, which will ultimately use the funds to pay up the Gencos, we don't have any NPAs in the public book. 50% of the private book is already NPA, and different assets are in different stages of resolution. So is it safe to assume that for at least near to medium term, that is at least for 1.5 years, there won't be any material headwinds on asset quality? Rather, the stock of stage 3 is likely to come down quarter on quarter for at least next few quarters.
Certainly. Absolutely. You are absolutely right. Asset quality is certainly going to improve, and stage 3 to stage 2 is going to further increase, and our total NPAs are going to reduce.
Okay. So that was the two questions from me. Thanks.
Thank you. The next question is from the line of Anand Lada from HDFC Mutual Fund. Please go ahead.
Hello. Thanks for giving the opportunity, sir. Sir, I have a couple of questions, sir. You indicated in the call that one of the asset, probably RKM Power, got resolved this quarter. If you can give some color, like what was...
Sorry to interrupt, Mr. Lada. We are not able to hear you clearly.
Okay. This quarter we saw one account getting resolved, which is RKM Power. If you can share some color on this in terms of at what haircut or loss this account got resolved. Have we been accruing interest on this exposure in the past or not? And incrementally, what proportion of the exposure will start accruing interest for us?
RKM Power Gen, I'll request my colleagues, to share the details of the resolution plan and the haircut that was taken to resolve RKM. So this is Mr. Lakshmanan. He's Executive Director and he's directly looking after these assets. So Lakshmanan, please help me with this.
In the case of RKM Power Gen, can you hear me?
Yeah, I can hear you, sir.
Yeah. In case of RKM, the overall sustainable debt that has been restructured now is 60% of the principal. And we have not taken any haircut per se. The balance 40% of principal and even the outstanding interest, they have been converted into OCD. And we have also taken 26% equity as a part of this restructuring. And we have also put a clause of cash free. So there's an unsustainable portion which has been converted into OCD. They could be recouped going forward depending on how the plant performs. So we have to keep a sustainable debt at 60% because of the rating agency's requirement. And we are hopeful that now the plant has started operating also. 2 units are operating. So they've, from this quarter they've started paying also.
Okay. And sir, while indicating a breakup of the gross NPA, we indicated that we have category A assets of 7,500 crore rupees, which are under different stages of restructuring. When we say category A, what it means? Are these operational assets or has the restructuring plan has been approved? Where they are, sir?
Yeah, these are the projects which have been already resolved. So, like RKM Power Gen, for example, FACR, SR Power Transmission Company Limited, Ratan India, Lanco Tista, Lanco Anpara, and TRN. So, 7,311 crore. These have been resolved.
So these have been resolved, but still they are a part of our stage 3 asset. So when they will move out from stage 3 assets, sir?
All these assets are moved out of stage 3. All these assets are moved
These
out.
are stressed. These have moved out.
And our recovery in all these assets have been ranging from 70% to 100%. On an average, you can say we have had 80% recovery in all these.
Okay. And all these are, we are accruing interest or they are paying interest on the exposure to us?
Yes.
Yeah, as per the restructuring, they are paying their, dues.
So we still has a gross NPA of 18,200 crore rupees. What is the breakup of that, sir, then, broadly?
So you see, 18,221 crore is the NPA, of which 2,178 crore is resolution plan has been approved and is under implementation. So this is one. And then those which have been resolved outside the IBC are 4,436. So you can say about 6,500 crore has been resolved, are under resolution, sorry. And I mean, these are under resolution. So 6,500 crore out of 18,220 crore is under resolution. And other 11,600 crore are in NCLT.
Okay.
So this is 18,220 crore. The 7,311 crore is already resolved and were at one point NPA, but today they are not stressed. They are outside this figure of 18,221 crore.
Correct. Sir, we have a couple of large exposures which I believe are under NCLT. And if you can update us, what's the status on the same, like the KSK Mahanadi and India Bull Nasik, two large exposure for us, sir. So any development in this specific case, sir?
KSK Mahanadi and which is the other one?
India Bull Nasik.
India Bull Nasik. Yeah, so Mr. Lakshmanan will give you the details.
KSK Mahanadi, basically, it's admitted and the resolution process is on. There were, three separate companies which was operating. One was the main generation company, another one was for the railway line, another one was for the water. So basically now, NCLT has approved the merger of these three entities. So now it's in the process, the RP is in the process of calling up expression of interest for sale of the asset. And in the case of Ratan India Nashik, that was the second asset, right?
Yes, sir.
So in that case, we are trying for a resolution outside the NCLT. PFC is the lead lender, and we are a co-lender with PFC. And we have had a couple of rounds of meetings with the Maharashtra state government, and the promoters have put forth a proposal that they are trying to, Maharashtra government or the Mahagenco taking over this plan. So we are trying to work on those lines. We have had couple of rounds of meetings. So we are hopeful and we are in the process of submitting a proposal to Mahagenco.
Okay. Sir, you indicated 4,400 crore of proposals which are outside NCLT, which is getting restructured. So India Bull Nasik is a part of that, or it's a part of NCLT?
It is part of that. This 4436, which is outside NCLT under resolution, 4,436. That includes, Sinnar Thermal Power.
Okay. And there were two other large exposures we had. One is IPCL Haldia and one is SR Mahan. What is the status of these two exposures, sir?
So IPCL Haldia, that is Hiranmaya Energy. We have approved the restructuring of this, and by end of February they were supposed to comply with certain preconditions for conclusion of that restructuring. One was tariff approval by West Bengal Regulatory Commission, and the other one was to demonstrate the technical capability of the plant. So they are on track for doing that. So we are hopeful that by end of February, we should be able to conclude Hiranmaya Energy restructuring. And second that you asked was SR Power NP. So that is admitted, and the bids have been invited and the bids have been received, and Adani is the one with the highest bid. So probably like COC is in the process of taking a decision on that. So we have received the bid, so final decision is to be taken on that.
Perfect. And sir, on the business side, if you can give some color, like how much has been sanctioned and disbursed under the SEP liquidity scheme of Government of India, and at what rate or what spread this loan has been disbursed?
Under the liquidity infusion scheme, you see the total sanction is 135,000 crore. This 135,000 crore comprises sanctions by REC, of 66,500 crore and 69,000 crore by PFC, and disbursement is about 46,000 crore, 24,000 crore by REC, and about 22,000 crore by PFC.
Okay. And so balance, when you expect the balance amount will be disbursed?
Balance, I think, should start happening in Q4, sorry, and should start happening in Q4, and by Q1 next year, we should conclude, with this scheme. We should fully disperse whatever is required and whatever can be dispersed under the scheme.
And sir, fair to say this disbursement or this sanction will also be at the same spread, like 3% spread which we are earning currently?
Yeah, it is 9.5%. So the spread is almost 3. It is not exactly 3. It is less than 3. It is about 2.5%, 2 to 2.5%, depending on how one looks at it. The spread is about 2%. In fact, average cost is 7.3. So 2.2% spread.
And so lastly, on the borrowing side, sir, we have some FX borrowing. If you can share what proportion of the FX borrowing is now fully hedged and what proportion is open?
Roughly, I think we have hedged about 60% of our borrowings of about roughly 50,000 crore or $7 billion. Of the $7 billion, 60% is hedged and 40% is not hedged. Finally, keep in mind, RBI also does not mandate any hedging for borrowings of 5 years and more.
Okay. Perfect, sir. That's from my side. Thank you, sir.
Thank you. The next question is on the line of Mahesh Oza from Mahesh Oza Investments. Please go ahead.
Congrats on a great set of results, sir, and thank you for your...
Sorry to interrupt, Mr. Oza. We're not able to hear you. Can you speak a bit louder?
Thank you for a great set of results and for your service to the country. My question pertains to how we are doing the dividend distribution. So if you look at FD rates currently, one-year FD rates are around 4%, and our dividend yield projected would be around 8%. So I would highly appreciate, like the government has asked, to start giving the dividend payout quarterly. Even if the dividend payout ratio is less than the 30% mandated, what happens is the greater the clarity in terms of the dividend payout, the higher will be the re-rating in the stock. Can I have your thoughts on that, please?
Yeah, so that's a very good suggestion. That's a very, very good suggestion. And I can see merit in what you are saying. And of course, there will be the challenge. There will be the challenge of us trying, compromising on growth, because the more dividend we distribute, lesser would be the funds available for growth. I do recognize that this challenge would be there, but I am pretty confident that what you are suggesting is doable, and we would give it a serious thought. Thank you.
So the second question I had was, so I would highly appreciate it if in our presentation we would write down, we would present our ESG credentials. I believe PFC and REC together are the largest financiers of renewable energy in the country. Whenever electric vehicles start taking off in the country, we will lead from the front. So these, if you look at our stock, these opportunities are not presented in our presentation, and we are unable to get investors who might be attracted to these opportunities. So I would appreciate it if you could highlight our environmental, social, and governance credentials in our presentation.
Sure. I mean, when we are concerned about this, stocks, trading at a P of say 4 or 5.
3.2.
Or 3.5 or 3.2. So that is certainly something that we all need to ponder over and reflect as to how that can be improved. And it is a little surprising if you see the results. They have been very consistent. So it's probably not to do with. I do think it has ultimately, of course, some bearing on the financials, and so that's why it is surprising. But you are right. I mean, we need to look at the ESG part more, and we will be doing that.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to one per participant only. The next question is on the line of Saket from India Capital. Please go ahead.
Hi, good afternoon, sir. Congratulations on the great set of numbers. So my question was around provisioning. So what we've seen is typically on the NPLs, we have already taken a fairly high provision cover of about 61-62% using ECL. Now this quarter we had increased the provisioning even on standard assets. Now, as you had answered in one of the previous questions, that we do not expect any new stress to come up or go into stage 3 assets. Do we expect this provisioning number to come down? Because last couple of quarters we are almost taking 700 odd crores of provisioning every quarter. So do we expect this number to materially come down, or would we want to increase provisions on standard assets even further going ahead? If you can help us understand that would be great.
Yeah, that's a good question. The provisioning on standard assets is about 0.38%. RBI expects a provisioning of about 0.4%. So we are more or less, about at that number, and we do believe that it's on the conservative side. So we do not expect it to expect more provisioning on standard assets going forward. This quarter, the provisioning on standard assets has gone down because there was a re-rating exercise, and in that rating exercise, because of one state, the provisioning has increased. So hopefully, in time to come, we are confident that there is going to be a lower and lower stress in the power sector. I already mentioned to you that there is a new scheme which is coming in. Then there is the budget announcement. Power costs are going down. You saw record lows in solar tariffs. So all these things, efficiencies are improving. So all these are going to help the profitability of the utilities, which are our major clients. And I do not expect provisioning, whether on standard or substandard assets, to increase substantially. Thank you.
Got it. Thank you.
Yes, Kunal?
Yeah, listen, can we take the next question?
I think her call has dropped.
Yeah, she'll just be joining. Just a sec, yeah.
Should we move on to the next question?
Yeah, listen, yeah. We should move to the next one.
Okay, thank you. The next question is on the line of Puneet Srivastava from Daiwa Capital Markets. Please go ahead.
Good morning. So I have a question first on the net interest margins. And if you notice, the net interest income, so it went up by almost 19% in second quarter versus first quarter. So you see there was like almost 530 crores sharp jump in NII in second quarter, and it sustained in the third quarter also. So we just needed to firstly understand what happened and whether this kind of NII and net interest margin will sustain going forward. Because if you see there was sharp increase in NIM also in the second quarter. So can you please explain that, sir?
Yeah, so see, primarily it is explained by the lower cost of funds. The cost of funds have decreased. And so, the margins have improved. Going forward, I don't think, these are kind of, these are numbers, these are exceptional numbers, let me say, these are exceptional numbers. The spread has been, in the range of NIM, the net interest margin has been in the range of 3.5 to 4. 4 on the higher side, 3.5 on the lower side. And over the years, it has decreased. Over the years, it has decreased. And despite the decrease, there has been good growth. And I expect the trend to continue. This is an exceptional quarter or an exceptional year.
Yes, so my question was more on the yield side. If you see the yields jumped also sharply in the second quarter. The interest income also jumped sharply, and it sustained in the third quarter, sir. So I was not referring to the cost of fund. Cost of fund, was actually almost stable if you see the reported numbers. So I was just trying to understand that was, why this jump happened in the yields on loans, and if any explanation is there, sir.
I've not actually analyzed it. We will analyze it and we'll let you know as to why there has been an increase in the yield. I think because the rates.
Hello?
Yeah, I'm there.
Members of the management team?
Yes. So probably...
sorry to interrupt, sir. We have... Hello?
Higher interest cost funds, loans, projects. I think probably that could explain the higher yields. Going forward, as I mentioned to you, I do not expect the net interest margins to be as high as 3.98 and to be as high as 22%.
Just to add to what Sindhu sir said, yield in this quarter has actually fallen by 10 paisa. If you see, it has come down. 9 months is 10.7 was of course, but in this quarter it is 10.61, largely because of the lower rate of interest that we provided for the Atmanirbhar scheme. In the previous quarter, it rose because of an exceptional income. We recognized the income of TRN Energy, so it gave us a higher yield. And so we expect the yield to remain in the range of around 10.5 or so.
Okay, understood, sir. And so just one question on this, if I can ask the CMD this. So you have continued, you have been there with the Ministry of Power earlier. So we just needed to have a broad view on what kind of, challenges you see in the power sector going ahead, and what kind of competition you see from banks and other entities.
As I mentioned to you, there are 2 schemes this year announced in the budget, and the government has been even, before the budget announcements, been trying to, now that, it's a complex job that the distribution companies are doing, given the state of technology and the state of affairs in the DISCOM. So, it's difficult. It's my belief that it's difficult to actually do multiple things at the same time, and so the distribution companies till now, most of them have been trying to address the issue of excess. I think to a large extent, the issue of excess has been taken care of, and now it is shifting more and more towards quality and reliability of power and sustainability. So going forward, and one would have seen that, if one looks at the numbers of the distribution companies, because they are the ones, at the lowest level. If one looks at the numbers of the distribution companies and the other utilities, they have been improving. So going forward, I expect this to be lower stress and business to improve. For us, yes, that will bring in competition from the banks, and that's a good thing for the whole country and for the sector. And PFC and REC especially, REC is going to take up the challenge of the banks. And as I mentioned, there are other opportunities available with us. With energy transition happening, the space is the requirement is a lot. The point is that there is a huge requirement, and
ladies and gentlemen, the line for the management has got disconnected. Please stay connected while we reconnect the management. Ladies and gentlemen, thank you for patiently holding. We now have the line for the management reconnected. Over to you, sir.
Yeah, so I was mentioning that even though there is, as the sector, improves, one, it will bring in more opportunities for us. The opportunities will be in form of, energy transition. They will be in form of better quality of equipment needed for better quality. Automation, modernization. So all those things are going to bring in more business, more opportunities for REC, and at the same time, of course, there is also going to be the competition from the banks. But I think the pie is huge. It's very big, and so there is enough opportunities for REC. Going forward. Thanks.
Thank you. We'll move on to the next question. That is from the line of Vivek Ramakrishnan from DSP Mutual Fund. Please go ahead.
So thank you. My question is on the leverage ratios that you'll have. You're generating strong return on net worth, and you're expecting growth to be lower. And even if you take a 30% dividend policy, your gearing ratio should decline over a period of time. Just wanted to know whether A, that is correct, and B, do you have any target debt equity in mind when you plan your growth?
Yeah, so we plan a CRAR ratio of between 15 and 20. 20 is like the ideal, between 15 and 20. And the rest of the questions, debt equity, Ajayji, what is the target?
Our debt equity ratio has actually fallen from almost 8 as on 31st March to 7.31. So going forward, we expect this to come down to around 7. So 7 for financing through capital sector, I think is a reasonable thing. So that is the kind of figures that we are looking at going forward.
Thank you very much and good luck, sir.
Thank you.
Thank you.
Thank you. The next question is on the line of Bunty Chawla from IDBI Capital. Please go ahead.
Thank you. Thank you very much, sir. Actually, previously got disconnected. Just one question. Do we have any exposure to AP projects which the government now is trying to recalculate the solar as well as wind power pricing, which is under the court issues is going on? So any exposure to the AP state, and out of that, how much will be under stress because of the court case issue?
All are regular as of now. All are regular, and the only exposure to this under litigation project that you are mentioning is about 600 crore, but it is through SECI, and we are getting regular payments as of now. And going forward, I do expect that it should be resolved. It should be resolved sooner than later.
Okay. And sir, if you can share total AP exposure, if it is possible.
Total AP government, all government companies. Just share you the numbers. Total exposure to Andhra is 28,000 crores.
Okay, sir. Okay. And sir, in the notes to account you have shared, the company has implemented restructuring plan of one of the borrowers, which is outstanding loan of 2,300 crores. So is it the same which you have shared, that RKM? Is it the same exposure, or can you share the name of that?
RKM Power Gen.
Okay, RKM, but that is okay. That's it from my side. Thank you and best of luck for the future, sir.
Thank you. The next question is on the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, धन्यवाद sir आपका for the opportunity. Sir, as you told that this part of continuous dividend distribution would affect the cash flow and the capex part improvement in books and all. Sir, do these valuations then account for a buyback at a slightly significant premium, thereby giving up opportunities to all set of investors to even participate, and if we go through the tendering route I'm calling for. And secondly, sir, as we have seen the policy of this current government, wherein they have put a lot of focus on the renewable sector. So, sir, going forward, say from 3 years or a decade from now, what is the vision of the current government regarding the household electricity being completely converted to the renewable form, and coal being the medium of energy only for the factories and the heavy industries? So, what kind of broader picture, sir, can we look forward, and how the dynamics of our business are going to get better or downgraded if this policy is being implemented over a period of time? As we hear, sir, these companies like Tata Power and all are putting more and more thrust on solar rooftop installations and moving towards the solar part of the story. So these two words were my primary questions, sir, please.
Yeah, so in terms of buyback on tendering route that you have mentioned, I think in the government sector other than ONGC, HPCL buyback, buyback by HPCL owned by ONGC, I do not think there has been any.
Sir, NALCO is going to do, Engineers India have done, so these are the two current examples.
Buyback of shares, you mean?
Yeah, buyback of shares.
Yeah, but those are not on tender route.
Tender route, both NALCO and Engineers India has got through the tender route. Okay. Even NMDC went through the tender route, wherein even the stock was ahead, the government of India participated and tendered the entire quantity at 105 rupees. That was a 1400 crore issue, sir. That closed on 15th of January only.
Oh, okay. So these are recent developments.
Recent developments, sir. I wanted to abreast the management because सब सारे factors sir नहीं ध्यान में रहते हैं. So I thought that this could be a good way of rewarding your shareholders other than the dividend part, sir.
Yeah, I mean both the options are available, as you are saying, dividend as well as buyback. Merits and demerits, I suppose, of both. We'll look into the buyback as well, but as one of the callers mentioned, there is also a demand for regular returns in the form of dividends throughout the year. So how we balance these competing demands is something that we will look at. But as of now, we have not thought of it. We have not actually thought of it.
Please deliberate, sir, in the board whenever.
And coming to your second question as to how things are going to pan out vis-a-vis renewable, well, I think it is anyone's guess about the time period. But going forward, certainly renewable and green power are going to be mainstays of our generation. How long it will take, we really don't know. Whether it will take a decade or 2 decades. It will all depend on technologies, especially of storage, as also, technologies which improve efficiencies of solar panels, solar cells. But going forward, certainly it is going to be the mainstay. One can't actually predict the time. And there will be scope, as you are aware. There will be scope for REC. REC is lending not only in generation, it is lending in transmission, it is lending in distribution, and generation, of course, is a big part, about 1/3. But we are also into renewable, and the other shift that is going to happen along with the greening of electricity is the shift from the fossil fuels in the energy sector in other areas other than electricity to electricity. So whether it is in transport sector or others, that shift is also going to happen, and that is going to increase the share of power in the country, the use of electricity in the country, and that should again open up new vistas for REC. Thank you.
Sir, can I ask a follow-up?
Sure.
So, what my understanding was, sir, that going forward, as you are lending to the distribution companies, the quantum demand that is there today is the pulls are from both sides, for the electricity part also, and for the factories and the heavy engineering segment. But going forward, as this demand pull and pressure is skewed down towards renewable, is that going to affect the business model for us in any greater way? And sir, for the distribution companies part also, sir, in this budget, what is there for the distribution companies? How is the debt part going to solve, and how has Uday implementations affected or being implemented? How has that affected the environment for us?
So I think there are two questions. One question you are saying is that the very existence, if I have understood you correctly, is the very existence of distribution companies, whether it is going to remain, and transmission companies, as more and more solar distributed solar, rooftop solar is installed, and it becomes viable and cheaper. Well, that is certainly a threat. One cannot discount that threat. That is certainly something which is possible because of technology disruption. That is something which we need to be aware of. But I think REC is a very mature organization. It's a very old, 60-year-old organization, and it has evolved over a period of time. And it has faced these challenges, starting off, with funding basically electricity pumps, to becoming NBFC, to funding thermal, and from thermal to renewable, and now also getting into operations. I think REC has shown the resilience and the flexibility to adapt to the times, and so we need to be aware of it, and we, however, are pretty confident. Second question is, about Uday and the policies of government and how they have impacted the distribution companies. Contrary to belief, I think Uday, it depends on how one looks at Uday. Obviously, it was not a panacea. If people expected it to be a panacea for all the ills, then I think we were over-expecting. But in terms of bringing in discipline in the power sector, especially in the distribution companies, and making the state governments realize that, this is the distribution companies are their own and their problems are also there. I think it was quite successful, and over the years, as I mentioned earlier also, the profitability, sustainability of distribution companies, ACS, ARR cap, AT&C losses, all these figures have improved. So Uday was one part of it. It was more about financial restructuring, and it did help in the distribution companies in reducing their finance cost. There are no two doubts about it. And the second, in making the state governments realize that, this is their own company, and the liabilities of the distribution companies are also the liabilities of the state government, and in future, if they do not improve, then they have to again, take back. And so, some states I would see have learned that lesson, and they are and they have improved. Maybe not to the extent that we would have liked to, but there is improvement. Notable example, of course, is Haryana. But even states like Rajasthan, from a loss of about 14,000 crore annually to a loss of only about 6,000 crore over a period of in the last 4 or 5 years. I think these are tremendous improvements, and the and the improvements are only going to continue.
Okay. Thank you.
Thank you. The next question is on the line of Saket from India Capital. Please go ahead.
Just one follow-up question I missed asking last time. So in the medium term, you said, sir, that our stress asset ratio should come down consistently going ahead, especially over the next 1.5 years. But sir, I remember last time when we had done the call, you had mentioned that we are monitoring projects worth about 4,000 to 5,000 crores when we had done the call after our first quarter results. Are those normal now? Are those paying regularly? And to that extent, this 18,200 crore number of GNPAs, this should at least remain flat over the next couple of quarters. We are not expecting any new stress or any new slippages into stage 3 assets over the next quarter or two from the COVID-type disruption. Is that understanding correct?
Yeah, absolutely. We do not expect any new NPAs, any new bad debts. We do not expect. There are none on the horizon at least.
Great. That's it, sir. Thank you so much.
One doesn't know, but as of now, it doesn't seem very likely.
Sounds good. Thank you so much for clarifying that. That's it from my side. Thanks.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to Mr. Chintan Shah for his closing comments.
On behalf of ICICI Securities, I would like to thank the entire senior management team of REC for sharing their perspective and insights. Thank you, participants, for joining the call, and have a good day. Thank you.